Morning, everybody. It's the 17th of March, St. Patrick's Day. Happy St. Patrick's Day, Steve.
Yeah,
We
thank
are
you.
Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning.
How
You
you
can call me
doing?
Paddy if you want. Yeah, not too bad, thank you.
Good.
All good in the hood. Yeah, St. Patrick's Day. I'll have to have a pint of Guinness. I had a few yesterday, so that'd probably carry over. It's still in my system.
Yeah,
Uh,
absolutely. Enjoyed the football last night?
yeah, I did actually. Funny enough, Joe. I must admit, first half I thought it was like even Stephen could go either way. Um, but just Arsenal had their chance, didn't they? They had
Yeah,
that.
definitely.
I mean, a
One
phenomenal
where he could
save
have taken
from.
it around the keeper. Yeah, it was
Yeah,
great, Steve.
yeah. And yeah, and then sort of like going up the other end, scoring straight away. I thought that sort of like disappointed with Ramsdale for the Arsenal goal, to be honest. Beating at the
Yeah.
near post wasn't great, although I do
Now
like
that
him
my
as a kicker.
son's a goalkeeper, I'm a bit more sympathetic towards goalkeepers these
Yeah,
days than I
exactly. Yeah,
have previously been. I think they are coached to sort of cut out the cross because in most instances they would cut that back.
right, right. Yeah,
But yeah,
yeah.
maybe it's a mistake.
Well, I think it's just one of those things that he did hammer it, so you can get caught. And it was, difficult shot to defend. But yeah, yeah. I think overall for Liverpool, it's a sort of like really putting Man City under pressure now.
Yeah, absolutely.
Still
Going to be
sort of
very
think Man
interesting.
City are favourites, but
Not sure anymore. Not sure.
that maybe their confidence is a bit rocked after not being able to
Palace.
finish off. Yeah.
Yeah. All right. Bored of people enough about that, I'm sure. Let's get stuck into some latest headlines and what's moving markets today. So, yesterday we had the Federal Reserve policy meeting, and as expected, they increased rates by 0.25%, which now puts the rates at 0.5%. That was in line with the consensus forecast. There was a dissenter among the ranks who called for a 0.5% hike, according to Fed indicators of economic activity and employment. They've continued to strengthen while inflation remains elevated. So they're looking to address price stability. Rate projections from Fed members recorded an increase in the end 2022 Fed funds rate to 1.9% from 0.9% previously. So expecting that we're going to see ongoing increases in the Fed fund rates going forward. Powell also warned that rate hikes could be accelerated. He stated that all meetings are now live, so typically we expect maybe 4 or 5 of those meetings to be active, where they will actually take action. But he's saying now, basically, anytime he talks, he could raise interest rates. So that will keep us on our toes. The situation with Ukraine yesterday. The hopes of peace talks were dampened by civilian attacks. Russian President Putin stated he did not want to occupy Ukraine. There are also reports that Ukraine and Russia had made significant progress in a 15-point peace plan. However, Biden called out Putin as a war criminal following further attacks on civilians in Mariupol. And the US promised another huge military aid package. So as a result, in terms of what we saw on markets, the Wall Street market rallied, but the dollar dipped. We saw some strong Aussie jobs numbers overnight. The unemployment rate declined to 4% from 4.2. And today we have the Bank of England rate decision. Markets are expecting the Bank of England will raise rates by a further 0.25%, and that will take the overall rate to 0.7 5% at today's policy would pressure on inflation and weaker growth. There is potential for some surprises in that later on today. So do be aware that is due out at midday today. So let's get stuck into some charts. Steve, what do you want to kick off with today?
I suppose we'll stick to the ones in the news. I suppose interesting pattern I've seen in oil. Am I sharing my chart, Joe? I can't. Yeah.
Yes, you are.
Um, this yesterday's candle, we saw this rally higher during the day. We can sort of like have a little look at when we actually saw that. It was around about well, it was early morning really. We saw this rally up until about 10 o'clock. Then the market came off again. But that left us with this inverted hammer candle. This is sort of like showing that basically buyers are testing the resistance of sellers, and the sellers have won. However, sort of like what happens after this is really important. If the market continues lower, then it's, you know, the buyers have to wait for another day. But we are seeing a move higher at the moment. So it's a similar type of time from yesterday. There's potential for a little bit of a turnaround in oil. However, we were sort of in the same situation yesterday when we're looking at this on Talking Bull, and I went for a gun to head on this, and I sort of faded it because the hourly candle yesterday sort of rejected with this shooting star candle. So this is where I sort of made the call yesterday. We saw the shooting star rejection. So on a short-term basis, I felt like it could move lower, and obviously it did. And we'll talk about it later, but it managed to like really play out nicely. So if we get rid of that, we're sort of seeing the same sort of price action. Now, for me, this is quite interesting, and you're seeing a shooting star candle appear now as we speak. So this could be another potential opportunity to sell into strength. In the same breath, I'd be saying I'd watch if there's any break of this, say, high point around about $98. We form a double bottom, and that double bottom basically would have a measured move of around about $6 to the upside. We can see you measure from the bottom to the neckline and project it higher. So around about 92 up to 98, $6, add $6 onto that, and then you'll get a nice little retracement. And we can see, I suppose, Fibonacci, we could see maybe the potential of where this could go to. So $104, $105 would be a 38% retracement, which is just a normal retracement in markets. So yeah, little bit of risk really if you're to fade into this, but it's, as I say, it's forming that shooting star. At the moment, it's a green sort of inverted hammer at the top of rally, which is not quite as strong as a red inverted hammer, which we saw yesterday. So I'll dive into that maybe towards the end of the show. I'll look again. On the gold side of things, price action has recovered from where we got down to yesterday. We got down to, this is at 6 o'clock, a low of 18.95. It's about $20 above where I've sort of called support. So on a daily chart, gold has actually shown signs of improvement. We had the sell-off. The sell-off has been rejected, and we finished with a nice bullish hammer at the bottom. So this is a morning star formation, especially if we get this positive day today, and the reaction higher continues. As you can see from the chart, support was around about 1877. The swing low from here, the high previous resistance turned into support, but we've stalled about $20 in front of there. Around about the 1900 level, which will be a psychological level as well, and reacting higher. So there looks potential for gold to move higher. And again, I think we were talking about dollar weakness, so that could add a little bit of fuel to that. However, and we've still got the sort of like the really live situation going on in Russia, Ukraine. The head and shoulders formation hasn't quite managed to make it to the measured move target, as I say, stalled in front. So, and this bullish engulfing candle on the 4-hour chart maybe highlights the point that we could get further upside, even up towards maybe 1963. That would be, for me, the next level or band of resistance would be between 1960 and 1963. That covers off gold. Let's look at what the Bitcoin is doing. Bitcoin seems to be sort of like just moving sideways at the moment, either side of $40,000. We are seeing these lower highs being formed on the 4-hour chart, but we are forming a bit of a triangle formation also. So we've got this as the top of the bottom of the triangle, and that as the top. So triangle formation is a continuation pattern normally. So this is like highlighting the potential for further downside. Really need to clear the resistance above 46,000, I think, within the next couple of months. So that's a bit of a longer term outlook on it. But if you look at time-wise triangles, normally sort of would get the breakout around about here if this continues. So yeah, it doesn't seem to be any really news impacting on cryptos at the moment. So it's probably just more of a dollar thing. Dollar moving lower would sort of like add a little bit of positivity to cryptos. Diving into indices, they had very volatile day yesterday. I saw one of our analysts manage to sell the Dow and buy the Nasdaq, and hit the targets on both, which was pretty decent to see. And it does sort of like, it is definitely in these volatile times something that you can consider. Just look at the real technical levels. There's always like two perfect trades in a day, the low of the day and the high of the day. That never changes. So on the FTSE's got this nice little formation, bottoming formation. It's broken above resistance at 72.60, which we talked about yesterday, and it's continued higher. That'll now be support. Further upside would be running into, well, let's redraw a little fib line and see what the short-term levels are. 78.6% retracement is around about 7,400, 7,400, and the resistance around here should sort of like cap the up move currently. But yeah, looking nice reaction higher. DAX even better. We've got this, I think I drew this on the charts live yesterday, this inverted head and shoulders formation potential. It broke through the horizontal neckline at 14,082, and it's really full steam ahead. Another 350 points higher now. So and again, still stalling ever so slightly around here, 4-hour chart, remember. So overnight it's stalled, waiting to see really where the impetus comes from this morning. On the 1-hour chart, little bit of a retracement here, hanging man candle, retracement, potential for a little bit of a dip back maybe, but looking positive on the daily chart. You can't sort of like deny that this looks like it is. I mean, there's like, 3 really positive candles there. No sign of that slowing down. On the Dow, again, similar sort of thing. Very volatile day yesterday, but a really positive day. 2 positive days after this doji candle from Monday, and further upside expected. 61.8% fib comes in at 34,481. So another 400 points higher than where we are now. And that would be just a nice little correction in this sell-off. And then we'll see how markets play out after that. But let's take a look at the sort of volatility we saw yesterday. And this is obviously around the Fed meeting. We saw the major spike lower. I think we managed to buy that here, and it hit target. So yeah, really well done there, Jamie, on the Dow trade idea. On the Nasdaq, we saw a little bit of a similar. I think we were short of this, and we hit the target on the downside before the rally higher. So again, really played out nicely. It still looks quite positive, building this sort of structure of sideways. It's almost the market resting before the continuation higher. So for me, indices looking pretty good. S&Ps coming in, resistance coming in at 43.75, support at 43.44. Again, looks a bit like a bullish flag to me. So further upside expected on the indices front. Yeah, that's about it from me, Joe.
Nice, Steve. Thank you very much. Okay, let's take a look at FX. Start off with the dollar index as usual, still trading in a bullish channel, as we can see, stalling around here, but still holding support above the 61.8 at 97.72. So while that remains the case, we can expect, I think, dollar to remain quite buoyant overall, but there is potential there for a little bit of choppy price action in the very short term. So we saw the resumption of some risk moves yesterday, particularly evident in some of the Aussie currencies. So this is Aussie CAD. We saw a big breakout of this downtrend back here in March. We saw a strong push to the upside. We then saw a pullback to retest that, but yesterday we posted a bullish engulfing candle to engulf all of the previous day's losses, which is just a little bit of an overshoot of that downtrend line. But we've closed back above it and pushing higher again today. So it seems as though that has attracted the bulls back in. If we look at Aussie yen, that's quite an interesting one. Smashed through this 85.80 resistance level, where prices had been sort of subjected to range trading for a number of months, but a really clear breakout there to the upside, and showing no signs of slowing further. Gains today by around about 0.5%. So looking pretty positive on that. If we look at Aussie versus the US dollar, still a little bit mixed here, but you can see really strong rally yesterday from the Aussie. But still got a little bit of work to do to overcome this downtrend resistance. If we take a look at some of the New Zealand dollar currencies, similar sort of situation, not too much going on with CAD. That's probably one of the stronger ones at the minute. But New Zealand dollar, Swiss franc continued its move higher. No signs of that slowing down at the moment. If we look at New Zealand dollar, Japanese yen, that's still got a little way to go to reach this previous resistance up here at 82.50-ish. And New Zealand dollar versus the US dollar is potentially forming a little bit of an inverse head and shoulders pattern there. So the right shoulder is looking a little bit squashed, maybe. So we've got an upward sloping one. I would probably say this maybe a right shoulder. It may even do a little bit more, but potential there for further gains potentially. And investors seeking riskier currencies, it would seem. If we look at euro, that continues to get hammered. We've seen obviously a really strong move. I think this was like 12 down days in a row we saw on the euro versus the Aussie. We saw a breakdown through this support at 52.52. And we've seen a rally into that level, which has been rejected, and we're seeing the sellers step back in. So from a technical perspective, that looks really nice, actually. A kind of classic retest of the what is now resistance, which was previously support, and a rejection, and prices moving lower. If we look at euro versus CAD, similar situation, maybe a little bit more choppy. So look at euro Swiss, what's going on there. So Swiss franc actually getting a bit hammered, really. Again, people avoiding these safer havens. I don't know what the feeling is really. Obviously there seems to be a lot of negative stuff in the press with regards to what's going on with the war, but that's not putting investors off at the minute, it would seem. Euro sterling, that continues to be quite choppy and still holding below resistance at 84.47. This level here, this 61.8, has done a job now on a couple of occasions. So yeah, it looks to be a pretty reasonable level to follow. Just take a look at euro US dollar. Choppy, like we've seen on the dollar index, really. Overall still remains in a bearish downtrend, and I'd expect there to be sellers on any strength on this, but at the moment price action is pretty choppy, so probably limited opportunities, I would have thought. That'll do, I think.
Excellent.
Okay, gun to the head trades from yesterday. Obviously, it was only Steve, and didn't need anybody else, did you, Steve?
No, I didn't, mate. Didn't need anyone else.
Do you want to talk us through it?
Well, yeah, I think I've already sort of like blown my own trumpet. So yeah, just managed to catch this move down yesterday, hit the target. We're back up at these levels. I'm a little bit nervous about this one now. I'd like to see what the price action is over the next hour, really, but I've got to go into my head. So what do I do? So maybe don't know. Third time lucky, Joe. I'm not sure.
Maybe.
Really not sure. Not sure.
We're on a decent run anyway with the gun to the head stuff. So just quickly throw up the spreadsheet. So yeah, 3R win for you yesterday on the back of a 1.15R win the day before.
Yeah.
So that puts you up at over 30R return. I think you have been higher in the past, but not by much. So yeah, decent.
Okay. Well, the one that I do like is gold, and obviously a little bit of dollar weakness creeping in. Maybe there's a bit more further potential on the upside. Does look like a little bit of a bottom pattern, not an exact one. Maybe you could say, this was a double bottom. We've retested this neckline here, and we could reject higher quite nicely. I mean, this is a bullish engulfing. This is an hourly chart, so it'd be good risk reward because we know where our stop is. If it breaks back down below here, we can stop it out. So we can have quite a tight stop getting in here at 1939. Maybe even have the stop as much as just like I'm just trying to think where we would be targeting, and maybe bring the target in a little bit. Yeah, give it a little bit of room below this candle. Stops at 1929, targeting a move to 1969. Which again, if we sort of like bring a Fibonacci from, oh, that's not great. Fibonacci from there is like comes in, it's just over a 38% retracement, and even from here it's around about 61.8% retracement from there. So a little bit of Fibonacci confluence around that target level. Yeah, 1969 the target.
Okay, nicely done. I'm going to take a look at Euro US dollar, I think. Even though I just said I think opportunities will be limited on that and it's choppy trading. But I always like it when you're flicking through your chart, Steve, and you see a level that you've drawn on previously and it seems to have
Yeah,
done a job. So yesterday when I did my analysis on Euro US dollar, I highlighted this level here at 110.51 as the level I wanted to sell with a stop loss up here above this high, targeting a move down to this kind of region down here. So looking for just around 3R return on that one. So we've seen the price move higher into this level. We've seen it act as resistance now on a couple of occasions. So let's back it. I'm going to go at 110.47 as the entry. I'm going to target a move down to, yeah, I like these levels down here, 108.31. What I might do is, because I like what I've seen here over the last hour with that candle and the rejection of that resistance, so I'm going to tighten the stop right up and go for a 7-1 risk reward on that one today,
wow,
Steve.
go for it, love that.
So yeah, pretty aggressive, but got to be in it to win it. So there's
Yeah,
enough volatility out there that you can, these moves aren't, out of the question.
yeah, exactly.
Okay, so that will do for today. In terms of data that we've got out, we've got the Bank of England today. We've got the US jobless claims number, which is due out at 12:30, and also at the same time we've got the US Philly Fed index. So at 4 a.m. tomorrow UK time, we've got the Bank of Japan policy decision. So if you've got any exposure to yen overnight and you're carrying anything into tomorrow's session, then do be aware of that, because anything that's linked to central banks and policy decision is likely to create volatility. So you have been warned. Anything else, Steve?
No, all good here.
Lovely. Okay, well, have a great day, everybody, and we'll be back tomorrow morning.
Cheers.